Welcome to the Daily Insights That Matter. Now, as part of its plan to turn India into a manufacturing hub and reduce its dependency on China, the government has been actively promoting domestic manufacturing. The Make in India project is gathering further momentum as a number of Apple's Chinese suppliers are given permission by India to begin production here, ideally through partnerships and joint ventures to expand the local value chain in iPhone and electronics manufacturing. Now, Apple and other US electronics manufacturers are looking to reduce their reliance on China after realizing the dangers of excessive concentration and dependence on one nation due to trade restrictions and COVID-related production disruptions. Now, out of 17, 14 corporations were given the go-ahead by the Indian government to partner with local companies and ramp up manufacturing capabilities within India. Now, the government made it very clear that Chinese companies would not be permitted to establish completely owned subsidiaries within India. Now, India currently contributes around 18% of the local value to the manufacturing of iPhones, and with this move specifically, it is anticipated that India would expand that contribution to 50%, representing a significant rise. Now, India has cut off Chinese businesses from its tech sector due to disagreements between the two nations over a long disputed border, specifically what preempted out in 2020. Now, this spread business hostility towards China throughout the nation. Following this, a number of Chinese businesses and applications that function in India, including PUBG, TikTok, and AliExpress, were banned. Prime Minister Shri Narendra Modi has made it a national priority to grow India's manufacturing sector, providing financial incentives and government support for companies' expansion projects. Now, the clearances indicate that despite the political tensions rising between China and India is permitting more Chinese businesses to expand their tech manufacturing operations within the country, albeit by way of a joint venture with local players only. Now, the JV will be allowed to participate in the PLI scheme for component manufacturing as well. Domestic steel production grew by 5.7% while consumption grew by 11.5% on a year-on-year basis during the first 3 quarters of this fiscal year, which is from April to December 2022. Now, steel exports, however, fell by 54% year-on-year in the first 3 quarters of this fiscal due to weak global demand on the back of an export duty of 15%, which was imposed on steel products between May 2022 and November 2022. Now, the domestic steel demand growth is expected to be healthy in this fiscal, driven by continued thrust on infrastructure development and the pickup in the real estate and construction activities amidst an overall economic revival. Now, while the exports declined sharply in the first 9 months of this fiscal, the recent withdrawal of export duty on steel products, as well as a reduction in the export duty of iron ore lumps and fines from 50% to 30% by the government in November, is anticipated to reverse this trend and to provide a boost to the Indian steel exports in the near to medium term. Now, while the long-term prospects for the metal sectors are bright, the weakening demand from US and the European Union could pose a risk to the global steel demand. So what does all of this news mean for you? Now, with this move, India could ultimately become a manufacturing hub with the Make in India program going strong. Local value additions to iPhone manufacturing in India is expected to reach 50% while also making India a self-sufficient electronics manufacturing hub at the same time. This will therefore have an indirect positive impact on you. Now, given the likelihood of a recession in the developed nations, the market for steel exports looks weak. However, the long-term growth in domestic steel demand is expected to be supported by an increase in private capex and the continued government initiatives. Hence, we would expect subdued demand from the steel space in the short term. This will therefore have an indirect neutral impact on you. While I say this is Raj Mehta signing off, wishing you and your loved ones the very best. Thank you.
Did you like watching this video? Then download our app Informed Investor to watch more such informative and interesting videos.